They're not selling because they're scared. They're selling because the system is changing. Something underneath the economy has already shifted, quietly, invisibly, and faster than anyone expected. And the next phase of that shift will affect every business, every bank, every investment, and every dollar you own. Billionaires aren't preparing for a crash. They're preparing for a transformation. And once you understand what that transformation is, you'll understand exactly why they're getting out now. So stay with me, because what comes next explains everything. To understand the move billionaires are making today, you have to go back to the beginning. Not to 2020. Not to 2008. Not even to the dot-com bubble. You have to go back far enough to watch the entire system form, rise, inflate, distort, and finally reach the point where it can no longer sustain its own weight. It starts in 1944, inside a hotel in Bretton Woods, New Hampshire, where 44 nations gathered to rebuild the world's financial system after World War II. America emerged as the strongest industrial and military power, holding 2/3 of the world's gold reserves. So the world made a choice. The US dollar would become the new global reserve currency. Every nation would price trade in dollars, settle transactions in dollars, and store dollars as the foundation of their economies. This decision created the backbone of modern global finance. But it also planted the seeds of the crisis we are experiencing today. Because the moment a country's currency becomes the world's lifeline, discipline becomes optional. Responsibility becomes negotiable. And the temptation to expand, borrow, and inflate becomes almost impossible to resist. At first, America had the gold to back its promises. But as the decades passed, spending grew. Wars grew. Welfare systems grew. Political pressures grew. And eventually, demand for dollars outpaced the gold supply behind them. That's when President Richard Nixon made the most important economic decision of the last century. He severed the dollar's link to gold. The US currency transformed into something new. Money backed not by metal, but by confidence. Confidence is powerful, but confidence is fragile. Once money became fully elastic, the economy entered a new era, one driven not by productivity, but by credit. Debt became the engine of growth. Interest rates became the steering wheel. Central banks became the driver. And for a while, it seemed to work. Stock soared. Home ownership exploded. Corporations borrowed to expand. Governments borrowed to satisfy voters. Consumers borrowed to maintain lifestyles. Debt grew faster than earnings, but no one cared, because interest rates kept falling. This was the beginning of what economists call the supercycle, a multi-decade boom powered by declining interest rates and rising leverage. But every boom has a limit. Every cycle has a breaking point. And every system built on debt eventually reaches the same moment, the moment when the cost of borrowing rises faster than the system can handle. That moment arrived in the early 2020s. It began quietly, with signals only insiders could see. In 2019, the repo market, a place where banks lend money to each other overnight, froze. For the first time in decades, banks refused to lend to one another. This wasn't fear of losses. It was fear of insolvency. The Federal Reserve had to inject billions just to keep the system alive. Billionaires noticed. Then came 2020. The world shut down. Money printing exploded at levels never seen in human history. Stimulus checks, corporate bailouts, unemployment bonuses. It all created a tidal wave of cash with nowhere to go. Asset prices soared. Stocks, crypto, real estate, everything. But underneath the euphoria, something poisonous was forming. The beginning of structural inflation. Inflation is not a glitch. Inflation is a symptom of a currency being stretched beyond its limits. For decades, the world enjoyed low inflation because global supply chains were optimized, demographics were favorable, and interest rates stayed low. But the pandemic broke supply chains, aging populations strained economies, and governments printed so much money that inflation became inevitable. The Federal Reserve tried to reassure the public, transitory, they said. But insiders like Jeff Bezos, Ray Dalio, Stanley Druckenmiller, and Michael Burry didn't buy the narrative. They recognized the pattern that comes before every major correction in history. That's when billionaire selling surged. Jeff Bezos sold billions of Amazon shares, the company he built, the company dominating global commerce. He wasn't raising cash for luxury. He already has more money than he could spend in 100 lifetimes. No, he was repositioning. The Walton family sold massive amounts of Walmart stock. Google insiders unloaded. Nvidia Insiders unloaded. Meta Insiders unloaded. Private equity firms offloaded commercial real estate. Wall Street hedge funds moved into cash, gold, commodities, and defensive assets. This wasn't a coincidence. This was coordination, without coordination. A shared recognition of a deteriorating system. But what exactly were they seeing? They saw the second phase of the crisis: interest rates. To fight inflation, the Federal Reserve raised interest rates at the fastest pace in modern history. This was supposed to slow the economy and cool prices. But it created an unintended consequence. The US government became the world's largest victim of its own interest rates. With over $35 trillion in debt, rising rates meant rising payments. Soon, interest on the national debt surpassed the defense budget. Then Social Security. Then every major spending category except healthcare. This is the point where previous empires began to crumble. Rome in the 3rd century. France before the Revolution. Britain after World War II. Spain during the Habsburg decline. The pattern is always the same. Debt inflation, rising interest costs, currency deterioration, insider exit. Billionaires know this pattern. They study it. They anticipate it. They act early. And the public? The public acts late. But the real alarm bell wasn't inflation. It wasn't interest rates. It wasn't even the banking failures of 2023. The real alarm bell was the fracture in global trust. For decades, foreign governments relied on the US dollar to store wealth. But in recent years, nations began pulling away. China reduced its treasury holdings. Russia dumped its dollars. Brazil diversified. Saudi Arabia explored non-dollar oil contracts. Even longtime allies like France and Japan began reducing exposure. When the world starts leaving the dollar system, billionaires pay attention. Because the strength of the US economy is built on one foundation: the world's trust in the dollar. And trust doesn't collapse suddenly. It erodes silently. Then it snaps. This brings us to the third and most dangerous phase, the point where the system becomes unstable. Not collapsing. Unstable. Like a bridge that still stands, but sways under pressure. Like a dam that holds, but leaks at the edges. Like a market that rises, but on weaker and weaker foundations. This phase is not about stocks or bonds. It's about the currency itself. Billionaires don't fear recessions. They fear currency transitions. Because money doesn't disappear, it moves. Power doesn't vanish, it shifts. And right now, the signs of a coming shift are everywhere. A national debt growing faster than the economy. A government financing itself through new borrowing instead of revenue. A Federal Reserve cornered between inflation and recession. Banks carrying trillions in unrealized losses. Consumers drowning in credit card debt. Corporations issuing bonds at the highest yields in decades. And global powers building alternatives to the dollar. These aren't random events. These are indicators of transformation. Transformation is slow until it's sudden. Gradual until it's violent. Predictable until the moment it isn't. This is why billionaires are selling. They're not waiting for catastrophe. They're front-running transition. Because the next stage is inevitable: the restructuring of the financial system. Every major financial era ends with some form of reset. New currency rules. New debt agreements. New monetary frameworks. New winners. New losers. Billionaires are moving to the side of the winners. They're converting stocks into cash. Cash into hard assets. Hard assets into private investments. Private investments into global positions. Global positions into generational wealth. Not because they fear collapse. Because they expect reconfiguration. The public will hear about collapse. Insiders will experience opportunity. And history repeats this story every single time. Look at Rome. Insiders hoarded land and gold as the denarius collapsed. Look at France. Elites moved wealth into Swiss accounts before hyperinflation hit. Look at Weimar Germany. Industrialists bought foreign currency and factories. Look at the Soviet Union. Oligarchs secured resource rights before the collapse. Today's elites are no different. Their strategy is the same. The pattern is unchanged. So let's break this down into the 3 takeaways you must understand. First, insider selling is not emotional. It's strategic. Billionaires move early because they have access to data, cycles, and risks the public discovers only when it's too late. Second, the economic foundations of the last 40 years, cheap credit, low inflation, global cooperation, have ended. This isn't a dip. It's a structural shift, a new era with new rules. Third, what's coming next is not a crash, it's a transition. A reset of how money works, how markets operate, and how global power is distributed. And the people preparing today are the ones who will dominate that new era. If you want to understand this transition, protect yourself from it, and position yourself like the insiders who already see it coming. Subscribe. Turn on notifications. And watch the next video. Because the transformation has already started. And the people who recognize it earliest will be the ones who survive it and rise from it.